So we want to talk about what moves the market. How do we make money in the Forex market? Now, let's talk about what moves the market. What really is responsible for the movement of prices in the Forex market? I'm going to give you an example now, a very practical example. Let's say you live in the US and you are coming to Nigeria for a break just to spend time with your family. And you had saved up $1,000 to spend in Nigeria for the break or for the vacation or whatever you call it. Right before you booked your flight or anything or coming down to Nigeria, you saw the exchange rate that it was 1,600 naira per dollar. No, let's use 1,500 so that I can be able to use the current exchange rate to give a more meaningful example. Now, let's now say as at October, you had $1,000 saved up, and as at that time, dollar to naira was 1,500 naira per dollar, which means if you had converted as at October 2024, you would have 1.5 million naira in your Nigerian bank account. Hypothetically, remember, this is not a real stuff. I'm just using an example because dollars to naira at that time might not be 1,500. I'm just using an example. So if you do not convert your money as at October, you now go to Nigeria on the 1st of January to spend money and have a nice time with your family. You have to exchange your currency, $1,000 to naira. Let's say I'm getting to the bank or where you want to exchange your fund. You find out that your money, $1,000, is now worth 1.6 million naira. You say, oh wow, that's an extra 100K. Like that's how you will see it. Now, that difference you saw right there, that 100K difference. Now, imagine it on the Forex market in the financial world. That is how it works. Traders make money from analyzing and also projecting that there will be differences in currency value. Now, this is it. Right before you exchanged your $1,000 to naira, the work of a trader is to analyze and see if there are economic indicators. Now, because we need to understand, why did you have 1.6 million and not 1.5 million? There are economic indicators. There are things that used to move the Forex market. Just one of them is the interest rate. The interest rate that is being released by the Central Bank of Nigeria, for example, if they increase the interest rate this month, let's say they increase it by 5%. Now, that increment by 5% will attract foreign investors. They will want to demand for our currency because now they want to invest in Nigeria because they say, oh, CBN is issuing like 5%, as adding more 5%, rate interest to whatever they are doing, whether it is T-bills or bond or something. They are saying, don't worry, we are increasing this thing by 5%. You want to invest in Nigeria, you want to bring your money, and you can't invest dollars. You have to convert it to the native currency, which is naira. So that is like just one of the things that might be responsible for the strength or weakness of a currency. But in this case, let's just assume there was a data that was released from Nigeria that is responsible for these differences that you see. Now, what moves the market? You can see on my chart, on my this number chart on my screen. I put it there, economic indicators. The part where I talked about the interest rates, you could see it. The central bank decisions on interest rates have a profound impact, right? Higher interest rates generally attract foreign capital, increasing demand for the currency, thus strengthening it. Conversely, lowering interest rates might lead to currency depreciation. So you have to understand that many things could cause difference in the value of a currency. And this is just one of them. You can see on the screen, I have a lot of them. I will send it to you personally if you send a DM, on the Instagram if you want to read through all these things. So many things can cause uh, change in the value of currency. I also put it here, the employment data. If people are unemployed, right, it means the economy is not doing well. It will affect the value of the currency. So not just this economic data is responsible for the movement of the market. Like I said, there are many things that can affect the market movement. Market sentiment too. People can predict, like people can analyze and project and say, oh, with the way I'm seeing this economy, it might be crashing, and if the economy is crashing, of course, the currency also will be weak. So people analyzing and projecting about a particular currency can cause, fluctuations in the market. So all these things you see, makes the market very volatile, does the movement that you see. So that's how it works in the market. Things that moves the market are economic indicators, market sentiment, events that's happening, like geopolitical events, all this they can be having probably trade talks, probably one country doing one agreement with another country about stuff they want to achieve or something. So many things could affect the movement of the market. So you just have to be able to see what data is being released in the country month in, month out. And this is the part where traders, they call this part fundamental analysis, because they use the news, they use economic data, they use whatever is being released from a country to determine or to project or to see how the economy is faring, which is going to affect the value or strength or weakness of the currency. So that is about what moves the market. And if you want this note I just prepared here, you can send a message on Instagram just as analyzed.